Hi, this is Zak Mir with the US Chartbreakers here at Zak's Traders Cafe for Wednesday, the 1st of May. Starting off with the S&P, which didn't end April well, fading at the resistance line there from March and the 50-day line at 51.20. Below that, we've got the floor of the channel there around the 50.10 mark, actually, and then possibly down to neckline support from January. 49.20 is a worst-case scenario, but the key here is trying to get back above 51.20. Moving on to the Nasdaq, which has also had the rug pulled. In this situation, we didn't quite get up to the 50-day line. That's at 17,900. The floor of the channel there from back in October, 17,100. And below that, we risk having to fill the gap down there from the end of January at 16,700. But the key here is getting back above that 50-day line as soon as possible, or something which doesn't look that likely at the moment. Moving on to the stocks, and it's a win to start off with, and you'll see why from the chart there from AGBA, or AGBA. Here we had the shares hit the top of that rising trend channel from back in May last year, and obviously they've come back, but $3.50 was our target, and the longer we stay above $2.50, the greater the chance of a retest of that $3.50 area after the bear trap gap reversal that we had last month. Rather less dynamic situation coming up next, but you never know. Here we've got Abiona, and here what's interesting is that we've got a potential bear trap rebound, U-shaped turnaround there, which tends to be very strong. It's sort of a hook type of affair, and above the old low there from back in the end of January at $4, looking for the shares to perhaps get back up to the initial January resistance at $6 by the end of this month. Obviously, that's a punchy call, but let's see how we go. The plus point here in terms of that U-shaped turnaround is the unfilled gap to the upside that we had at the start of the week. Moving on to another situation of note at the moment, Cyclocell, and here we've had an island bear trap reversal, so gapping down, actually breaking that support line, wrong footing the bears, and then back up to the 50-day line. End of day close above the 50-day line, $2.23, and we're looking at a potential move back up to the top of that broadening triangle from the turn of the year as high as $3.20 by the end of this month. Ideally, we stay above on the right side, $1.80, yesterday's support area. Moving along to a requested stock from yesterday, and here the question was whether the shares are going to peak out basically at $230 plus on Coinbase, and obviously the way things are going, it looks as though they have. Our initial target on the downside around $187, which was the old February peak and the peak late last year as well, back in December. The view at the moment is that we could actually be looking at worse than $187, so below that, looking at the floor of that rising trend channel from last year, as low as $150 by the end of this month. So obviously a punchy call there, but let's see if that pans out. An interesting situation coming up with Elium, where another stock where we've overshot the runway in terms of our target. We were looking for $6, presumably by the end of this month, and we seem to have beaten that by quite some distance. The upper parallel of that rising trend channel from back in March last year is up to $9.50. We're looking for that perhaps as soon as the end of this month, especially while we remain above the $6 level. Next up, a stock which is new to us, and here growth generation. We've got the falling trend channel there. That's been in place since the beginning of last year. A break of the top of that channel, $3.20, could take us up to as high as $4.40 by the end of this month. Ideally, we stay above the 270 area, which was resistance on the way down. Next contender is GeneDX, and here we've actually hit the top of that rising trend channel from back in October at $18. If you're a fan of the shares, then you'd be looking for greater glories in the upper parallel of that rising trend channel, perhaps up to $24 by the end of this month, while we remain above the floor of the gap there around the $14 area, $13.90, yesterday's low. Interesting setup coming up next at Haoxi, or Haoxi. Here you can see that we've got a rising trend channel base, and broken the 50-day moving average in that line of resistance there from January. That was around $6.20. Above that, we're looking for as high as $12 by the end of this month at the top of that rising trend channel from back in January. Good setup coming up with Lending Tree with the unfilled gap to the upside through resistance. That suggests that we're got plenty of gas in the tank and could head up to as high as $70 by the end of next month while we remain above the $44 area, which is basically pre-breakout resistance for the shares. You can see there was also resistance from the beginning of last year in the $46 to $47 area, and we've cleared that too, which is quite encouraging. The next situation is one that we looked at before, and still hoping that we will have a turnaround here. The top of that broadening triangle base, falling triangle base is at $4, so looking for that as an initial target while we remain above the 50-day moving average at $2.80, and ideally that target's hit well before the end of this month. Moving on to the last three. The first one, perhaps a strange chart to look at. It comes in the form of Murano. Here, the guess is that after the big rally, a spike and sell-off, we're in a rising trend channel base from back in March. Top of the channel there at $17. We're looking for that by the end of this month, while we remain above the floor of the channel at $8. Clearly, that one not for widows and orphans. Moving on to the last two, Swivel and or SWVL, if you want to call it that way. Rising trend channel here from the back in November, top of the channel there at $20.60. We're looking for that by the end of this month, while we remain above the 50-day moving average at $9.75. The gap high yesterday suggests that we have momentum here, and ideally there's no end-of-day close back below the pre-spike resistance of yesterday, $12.40, ahead of that move towards $20 plus. If you're looking for a big gap fill, you've probably come to the right place in terms of the last stock today, which is Tilray. Here you can see that we've nearly filled that gap up to $2.50. That was from last month. End of day close above $2.50, and we're looking for up to $3 over the next week or two, which is the top of that rising trend channel from back in October on the Tilray daily chart. That's it from me today. More updates tomorrow.